I'm going to start with Nvidia because they came out with earnings after the bell yesterday and forecast a pretty low sales forecast for the current quarter, coming in well below analyst estimates. A lot of this has to do with a lower demand for cryptocurrency mining and a lot of oversupply now for some of the graphics chips. And so this is leading to a read-through in all of the other chip makers as well, like Applied Material and Advanced Micro Devices. Now, RBI analysts are saying a lot of these supply and demand dynamics won't even balance out until the fourth quarter of 2019 or the first quarter of 2020, so this could be painful for a while. Now, outside sort of the micro earnings, there is a broader macro story going on with the chip makers, and it all comes down to trade. We're taking a look at two ETFs in the chip maker sector. Those are all negative now, going back for a year. A lot of this, of course, has to do with the end of the semiconductor cycle, and Wilbur Ross coming out yesterday and saying those 25% tariffs are going to go into effect in January. And a lot of people do not think there's going to be a resolution with the U.S. and China at the G20 Trade Summit later this month. John.
Hey, Taylor, thank you. So the big move lower with Nvidia, the biggest move lower since 2017. I want to bring in Sylvia Jablonski, Direxion Investments Managing Director, still with us. Krishna Mamani of Oppenheimer Funds and Bloomberg's Luke Cower. Let's join with you first, Sylvia. The big move lower in the chip space, it is toxic out there in this sector right now. Can we climb out of this hole we've climbed into?
It is toxic, and I think that there's sort of two ways to look at this. You have a short-term opportunity and you have a longer-term opportunity. On the short term, I would say the opportunity is to look at semiconductor bear funds. Luke and I were talking on the break. We have an ETF that is a 3-beta bull fund. It was up 10% going into Nvidia earnings. Right. Pre-market, the bear fund is now up 10% as a result of earnings. So it's an epic move overnight, and it's just basically off of Nvidia and AMD coming out with weaker earnings.
Sylvia, what is the biggest macro story that's going on here, though, with this company? Quite clearly, this company is missed, but the broader sector could be smartphones, PCs, trade, even Bitcoin with the likes of Nvidia. What is it? What's the big driver right now? You know,
I think you check off every one of the boxes you just mentioned. Number one is trade and the fear of additional tariffs coming into play. Number two is a slowdown in growth of Apple phones, of gaming, regulations in gaming being kind of like on hold internationally, globally, particularly in Asia. The slowdown in Bitcoin, it's down, it's sort of slashed half of where it was over a year ago. So, the GPU number, there's an oversupply now of GPU, and you have it in Nvidia, you have it from AMD. And unless you see a massive growth in, autonomous vehicles, in, data centers and all of these things, and then, a year's worth of potentially wearing down this inventory in semiconductors, I think for the long term it's going to be a slow roll for this sector.